What's up you guys, Tomy Shaw here, and are we in a bull market? I got 5 points that I'll be sharing you guys to see if we're in a bull market right now. When we're looking at the Dow Jones, goes from 2009 to 2020, we can see that the market keeps on going up and then it gets to approximately $30,000, goes down to 18, then it goes back to $24,000 here this month. Alright, so according to the MACD indicator, we should have sold in 2015, bought in 2016, sold in 2018, buy in 2019, and in 2020, it's a clear sign that the markets are in a bull market according to the MACD moving average convergence divergence indicator, okay? So that's the first indicator. The second indicator that I'm looking at, unemployment levels. They're equal to the depression levels. We're not even talking about the great financial crisis. We're talking about the depression level. This is important to remember because what is supporting this market? Essentially, it's not consumers, it's the Fed. The Fed is pumping trillions of dollars to keep this up. But as long as we don't go back to a normal level of consuming, it's impossible that markets stay at these levels. Okay? When we're looking at depression levels, usually what happens to the stock market, it falls more than 50%. When we're looking at Japan, when we're looking at the Great Depression in the 1930s, stocks fell more than 50% and it kept on going down lower and lower and lower. So money keeps moving around. Maybe it's going to leave the US and go into China or something like that, okay? So fundamentals are no longer attached to markets. It's like if you're buying a rental property and you don't care about cash flow, what you're saying is that every 5 years I'll just refinance, take my money out and pay my debts. That's essentially what people are doing. Or the great default will pay a higher price for the stock. That's called speculation. If there's no fundamentals, it makes no sense, okay? Paradigm shift. Maybe China is going to become the new power, the new currency, and they're going, because they're based on the production, they're based on something that is real. And maybe they're going to become the new stock market, maybe they're going to have the new capital inflows, and they're going to become the #1 power in the world, and all capitals will be flowing in that region where it will be starting to inflate their market, okay? Fifth, production versus consumption. When you talk to most people, everybody's talking about how can I consume more, how can I get more credit, how can I buy a bigger house, how can I buy a bigger car. Everybody's thinking about consuming because when they consume, they feel rich. We're not talking about real wealth, we're talking about feeling wealthy. And there's a big difference between the two because when you're building wealth, you're building assets, you're buying assets which generate production. They give you more income and you can pay off that debt quickly. That's real wealth. According to consumption, well, a lot of people are just consuming because they want to feel rich. And that is illusionary. It's not real, okay? So are we in a bear market? According to everything that I'm seeing, I have a hard time believing that markets can stay elevated like this. For me, this makes no sense. Maybe I'm trying to look at this from a rational standpoint, but when I'm looking at the markets, it's not even attached to fundamentals anymore. So essentially, it looks like a big bubble. It looks like something that's ready to implode. And in my opinion, I have a hard time believing that markets can stay elevated for the long term, especially with the new numbers that will come out when these forbearance end, when everything comes to reality and people are seeing what is really going on. When that's going to hit, I think that's when we're going to see markets crashing, housing market crash, we're going to see the stock market crash. And maybe I'm wrong, but I have a hard time to believe that it could keep on going, because if there's no fundamentals, there's no way to pay off that debt. There's no, when creditors are looking at how are you going to pay me back in the future, and they don't see anything positive, they're not going to lend, or they're going to downgrade those bonds to the triple B to junk bonds, and then the company will be worthless, and will want to invest in these companies because people will be asking too much in return for what they're giving them. Okay, so if you think the same thing as me, just leave comments down below. Maybe I'm not seeing something. I know the Fed is pumping trillions and trillions of dollars to keep this propped up, but still, as soon as they back away or something changes, or maybe people will lose confidence, then we could see this market turn around. So I like to see you guys' comments down below if you think the same thing as me or anything. So if you like this kind of information, you can like, subscribe, and I'll be seeing you on the next video.